Welcome to the BS Banking Show, Ankur. Good to have you here.
Likewise, thanks for having me over, Raghu.
First things first, what is your sense of the funding winter and the outlook for 2024?
The funding winter is very much real, and I think it is like any cycle that we're going through. Outlook for 2024 remains that it is going to be very calibrated in terms of the performance for the overall ecosystem. But I think this is something which was really needed for the growth of the the way the businesses were growing in the startup space. We all know. So I think it's time that all the stronger business models will emerge, and there is enough VC capital and growth capital available for businesses who are really, I would say deserving. So I don't see a challenge in that. Of course, it means a lot of pain in the short term, but I think long term for the overall ecosystem, it cannot be something better. I think the listed stock market has been a good barometer for the startup success. If the businesses start showing profitability, I think there is enough and more appetite for well-deserving businesses.
What will be the key themes playing out for fintechs on the regulatory and governance fronts?
I think fintech is going through a lot more, I would say, challenges versus the outside of the other startup ecosystem, right? Because many new business models emerge, and now obviously the regulatory people are playing the catch up. But I think whatever they are doing is again good for the overall ecosystem, because there was absolutely no control over the kind of some of the practices that were going on. And we know that our regulators that way think very well about the overall health of the economy, and there were too many practices which were not under control. So I think the entire regulations which are coming around the fintech space, so that the fintech sector itself can grow with clarity, because otherwise everybody had their own interpretation, which doesn't really work well in the long term. So we'll keep seeing, I think, more and more clarity coming in from areas people need more guidance on. But finally, it will result in the growth of the overall ecosystem. And again, it comes down to the same funding winter. Weaker business models will see challenges, which you're already seeing happen. Because finally, it's in lending business, credit losses are very critical to maintain, right? Asset quality is very important to maintain. And banks have been able to really adopt technology over a period of time. So I think it's that way a win-win for the overall ecosystem.
How do you see all of this playing out in the bank fintech partnership model?
No, I think that's already going on. We have seen very deep partnerships happen between banks and NBFCs and fintech players. And I was just reading today only, there was so much happening on the consumer durable loan itself, where banks and NBFCs and fintech companies are really almost neck to neck playing in. Because banks have the float, and the NBFCs and the fintech players are able to create that entire new pipe of customers that were not being underwritten. So from a concept perspective, there is a lot to happen. And with regulatory clarity coming in, all the banks know what they should be following. And finally, the customer is able to get the credit in a much more obviously faster and keener manner. But it is important that in this situation, the banks obviously are going to play catch up, right, with the overall fintech companies. And fintech companies which are only focused on CAC, which is basically user acquisition and growth, suddenly realizing that they had to actually think about profitability as well, that lending at all cost and growth at all cost is not something that is scalable.
Do you think we are seeing the early signs of consolidation in the sector?
Yes, definitely. It's going on already. And there have been obviously some couple of larger names which are going through some kind of challenges, which basically means for the incumbent players and the larger fintech companies, it means that they can actually expand faster, right? Consolidation is very healthy, and there are so many fintech companies which have raised anywhere from early stage capital to Series A businesses to all the way late stage companies. And now, as they struggle to grow under the new regime, they may always have a challenge, right? Because today, just being a standalone platform lending company doesn't really work. Everybody started to have their own NBFC model, and getting an NBFC license also not straightforward. And that's a very different business, having your own balance sheet and lending versus co-lending with another bank, NBFC, and being a complete tech platform. So as business models are emerging, it is resulting in more and more consolidation opportunities coming in. And I think this year we expect a lot more consolidation to happen. Which is already happening, right? Because today, not more fintech companies are going to come in the lending space. Existing ones itself have to show the scale up. And there are good names which have scaled up, have become profitable as well. And then you're able to get even cheaper debt. So I think there's already a few playbooks of profitable and fintech companies and NBFCs out there, which everybody will try to replicate.
How do you see the private credit market shaping up from here on?
That's again a very a word that is being heard a lot, right? Along with funding winter, private credit is seeing a lot of action as well, thanks to the changes and again in the regulatory framework around taxation, which has given a lot more tailwinds to the private credit space. Now every mutual fund house, every alternate house is coming up with a private credit strategy, because people assume that performing credit is going to be a large area where a lot of action can happen. And we expect obviously the market to keep growing because private credit is still a very small percentage compared to global market that is there. Private equity obviously has seen that growth over the last 10-15 years. Now is the opportunity for private credit to as well to grow. Already on private credit, the stress asset side has seen a lot of action in the last 5-7 years in NPA resolution. Now I think on the performing credit side and areas like the new emerging economy that players like us are focused on, like venture debt, etc. There's a lot of interest from the domestic funds, domestic, I would say, family offices, HNIs, etc., to try to get that high yield debt, right? And with the economy doing well, there is going to be always various scenarios where banks cannot fund, where traditional lending norms may not work out, and private credit funds can take a lot of opportunity out there in terms of growth. Whether it's domestic capital, whether it's foreign capital, everybody is now looking at this very closely. People are able to raise funds, deployment opportunities are also there. And of course, as any cycle will go on, there will be many players in that. Then finally, the underwriting will decide which players will able to continue to scale and grow.
And before I let you go, can you give us a sense of your ambitions?
We like to sort of, keep our head low and keep executing. I believe that is very important in the lending space. We have almost grown, I would say, as a overall business. We were like a 50 crore AUM in 2013, 2014. Today, we are managing over 2,300 crores. So in the last 10 years, we have grown quite well. And of course, the opportunity for us to again keep replicating the similar kind of growth in the next 5-7 years. As the economy is going to grow, the GDP is going to grow, we have to play a sort of an important role in that. So it is all about, finding the right opportunities, having the support from the local LP ecosystem, possibly even raise global capital, and try to see that our clients, which are actually growing, there's a lot of need for debt capital who is able to solve for problems which the domestic banks, etc., cannot solve for. And that's where big opportunity comes for us, right? So we have been growing 20-25% every year. And we would like to maintain that growth. I think if we were able to do that growth, that should not be challenged in terms of the size. I think we have to survive multiple headwinds that come our way. I think as we have discussed in this conversation so far, a lot of regulatory challenges happen which nobody foresees, right? So you have to ensure that the client you're working with, the borrowers you're working with are working on a very robust balance sheet, right? And there will be more and more cycles coming our way, which nobody can predict. And it's important that at that point of time, very, very conservative underwriting, structured way of looking at things, very, very threadbare analysis of businesses is critical. And how we learn from that and learn from our mistakes and not repeat the mistakes is going to be as well critical.
Ankur, it was wonderful having you on the BS Banking Show. We look forward to having you again.
Thank you, Raghu. Thanks for your time. Lovely to be here.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.